What's up, everyone? Markets are certainly are getting a little bit overstretched in this bull in the bear market rally, and they're at the very interesting inflection points. Some of them took out resistances, some of them still below it. Overall, easy money has been made. We pretty much caught all of this rally in S&P and Nasdaq. Count is up almost 30% in 6 weeks. Um, Yeah. So, but now the easy part is over. Why? Well, I suppose we can have another week or two of rally, maybe. I also of an opinion that this is just a trap. Very impulsive rally off the lows, caught a lot of shorts off guard, and it doesn't matter if you trade Bitcoin or SP500 or Forex. The charts are pretty much the same in all of these instruments and markets. So we're going to take a look in this video at Bitcoin, ETH, gold, all the indices, and US dollar and other Forex pairs. Now, this huge daily head and shoulders is still in play, even though we rallied off the lows. Unless we take out the shoulder, which is here, this is a pretty valid head and shoulders. As we all know, nothing goes down in a straight line, and sometimes deep pullbacks before resumption of sell-offs occur, like it did here. As you can see, it was a very impulsive move on no news or anything, and then this happened, and we are pretty much getting a very similar picture right now with this rally, which is pretty steep. Take a look. This previous rally was even steeper, but this is getting pretty steep, and I think this week we might actually have a little bit of a pullback to sideways consolidation before maybe another leg up to basically. If this is a trap, the way you're going to trap people is the late buyers, not professional traders who were buying all the way here, like we did in apexbull.com and in our signals. But people who are now late to the party and they're like, oh my God, I'm missing out. So they're going to FOMO in thinking that everything is hunky-dory. And that's when the market is going to take them to the cleaners. And that's exactly what I'm anticipating, probably by September or early September. Might happen sooner. But we trade the price. We don't trade what we think. It doesn't matter what I think or anybody thinks. The price is the price is the price. And if the price is going up, this is what your risk rationalization of what market should be doing does not have to correspond with what in reality market is doing. So we trade the price, and all the intellectual circle jerk comes secondary. Now, doesn't mean we shouldn't be anticipating certain things, but until we at least make a lower, we're still making higher highs and higher lows here. So too soon to talk about reversals. If it's going to start reversing, we're going to make a lower high, then a lower low, and on a daily. And again, if that happens like it did here, as you can see, right? So rallied, a little bit of a pullback. They tried to take it up. Let me zoom in. Rally, pullback. They tried to take it up with a pretty nicely bullish candle. And then I remember I was trading this. And then it was the bulls were not able to make a higher high. Bears took over. This candle is where bulls capitulated, and then it just started rolling over, right? So maybe you're not going to be selling it all the way up here. Let's say you were selling it here or even here, and then this happened, right? So who cares that you didn't sell here, but you sold here actually? That's and that's the scenario basically. People who are trying to short this market right now, they're trying to catch the top, and that's actually super detrimental to trading as you're constantly thinking, oh, this is the top, or this is the top, or this is the top, and this, and you're just getting stepped out, stepped out, stepped out, stepped out. Wait for a confirmation of lower high and lower lows, and not when you have that market switch, change of character occurs, and that's when you start looking for shorts. So for now, you can take scalp shorts because, for example, um, this looks a little bit overstretched from Friday. So on Wednesday we rallied, then we had a pullback, retest of this trend line, this daily trend line. We basically retested it. Even daily candle looked super bearish. This one, inverted hammer, and obviously everybody on YouTube were saying, "Oh, that's it. That's the top. Short, short, short." And that's exactly what happened. Those idiots all got squeezed, and now I think on Friday we rallied in a quite aggressively, as you can see, just bullish candles straight up. I think you can definitely scalp a little bit to the downside before we see what happens next. But again, we're still printing higher highs and higher lows in risk. So for me, I would want to see a rollover of this close below this trend line, below this low, and making a lower highs and lower lows for me to start being aggressively short. But for now, I can scalp short, I can scalp for long. We can squeeze even a little more because funds are still a lot of people were still bearish, and this is them pretty much capitulating and stepping out. And now they see that a major trend line has been broken, and with a bullish follow through, they might pee their pants a little more and close their positions, cover their shorts. So I think the markets will start rolling over, and we are approaching 618 of this sell-off here. I think here we go. As you can see, the 618 comes in a little higher, and I think that's pretty. That's going to be a very good resistance. The 618, a little bit above, probably going to hit this week, and then we'll see what happens. But a lot of people will start FOMOing it in, seeing that this is a bullish breakout, and when they FOMO in, that's when markets will actually turn because the people are still a little bit skeptical. The sentiment is not bullish, and once it actually the sentiment starts to fake out that this move is bear market rally, when traders will start getting too complacent and will start thinking that we're back into the bull mode and everything is hunky-dory, that's when the markets will do what they're designed to do, kick everyone in the balls and roll over. So that's Nasdaq, and S&P. It still has room to go. Still has room to go for its trend line resistance right here. Let me actually draw some fibs. So we text 6-1. You know what? Maybe we can even do this to the top. So maybe we can tag the trend line, maybe 618 of this whole thing down, and then roll over. So, but I will be definitely looking at what happens at this trend line here this week. And again, scalping shorts easy. I think that retesting this area around 4200 as a scalp short can definitely work. Now let's take a look at US30. So US30 is almost at its resistance. So basically, Nasdaq is the only one that took out its trendline resistance, and US30 and S&P 500 still have room to go. And that's when I think we're going to start getting into trouble when S&P and US30 will get, well, primarily S&P will get to this resistance around 43, 2500. And that's when US dollar might start strengthening again. I don't think there's much news this week, nothing interesting. And yeah, so ETH is still pumping. ETH also, see, all of this risk instruments have the same structure, every single one of them. You look at ETH, you look at at S&P 500. It's the same shit. They all have very similar price structure. So it doesn't matter if you trade, if you're a crypto trader or you're S&P trader or you're a forex trader. All of this is very interconnected to the point where you can express your trades via any of these vehicles very easily. In any case, um, so ETH has room to go. BTC, I think, is lagging. Yeah, BTC is just not looking healthy, to be honest. It's look how anemic. After every rally, it finds sellers, and sellers would follow through. And look at this anemic rally again with this candle, this candle, this candle. I think this thing is ready to roll over. We're basically retesting the underside of this uh, wick, and we haven't even touched it, and we're already forming these nasty reversal candles. Not much is mm, I don't think there's a lot of buying interest. Yeah, this is just merely a pullback off the lows. Very anemic, very anemic. I wouldn't be buying Bitcoin if I'm going to be trading crypto to the long side. It's ETH all the way. So for ETH, I would think that this is still the play. This is the area of interest. So maybe some pullback here and another rally up. You buy it right here and target this trend line here. So that would be the play for the coming week if if risk continues to bounce. So ETH would be the ideal instrument. I wouldn't fuck with Bitcoin to the long side just yet. Not a lot of conviction. So all eyes are on ETH because of the merger. Blah blah blah. We all know this. All right, gold. Gold is interesting as well. Again, see, like Nasdaq, gold took out its trend line. However, it's having trouble around this 618 area around 1800 for all of last week. We've pretty much been banging around, just tapping 1800, and 1800 is being providing quite a resistance. Well, why resistance? Simple. We are, where are my tools? We're just retesting this order block here, pretty much the underneath of this previous support, then the breakdown, and we're just retesting this zone here. So we need to start closing above it for rally to continue. However, this rally, as you can see, is already without major pullbacks. So maybe more sideways consolidation is in the cards before more upside. So I wouldn't be buying breakouts to the top side, but I would be maybe interested buying range lows. So when if price goes to 1785, 1780, a little dip is what I would be interested in buying to get long. Why am I getting long? Well, because we're still making higher highs and higher lows. And like last time here, it started slow, but it kept going and going and going. You just need to basically enter when it does one of these things instead of chasing it up here. Wait for the dip, wait for the dip, wait for it for a price to get into the moving average cloud, even like here and here. That's what I'll be looking at, on the reverse side here, here, right? So if it starts trending, you can see that it bounces into the moving average cloud, bounces up, moving average cloud, bounces up. The bounces are getting shorter and shorter. So I think this initial leg might have a major uh, either consolidation or a pullback before a rally up. So I'm not going to be, even if I'm going to be buying around 1785, I'm not going to be risking too much because I think a bigger pullback can happen, something deeper maybe to this level here. To retest this level here, maybe something like this, and then more up. So that's going to be, and you buy it on the uptick bounce here, right? So that's what I will be looking at for gold. I would get a lot more aggressive into longs here Uh, um, and if I'll be just buying support here, let me remove this. Sorry. So if I'm just going to be buying the support here like this, I'm not going to be risking more than 2%. There, I can start loading up a little heavier because if we create a deeper pullback, even if it doesn't make a new high and it just goes 50% retracement of this leg, right? And I catch 50% pullback, it's still going to be nice trade in itself. So in any case, gold um, needs to probably sideways consolidate a little bit more before more upside. So uh, yeah. So well, I've explained gold. Let's see what else. What else? Dollar index. So dollar index had this head and shoulders. Um, very simple. I'm staying dollar bear unless we take out this trend line, this green trend line. So basically channel down, right? We are at resistance. So unless we take out this channel and close above it, and then obviously if we close above these highs, I'm staying. I would be looking for long opportunities and in euro, pound, New Zealand, Aussie. By the way, New Zealand and Aussie performed last week quite nicely. They pretty much closed on the top, where euro and pound actually they rallied in the beginning of the week, but then sold off as well. So let's take a look at euro now. So euro again with these channels and downtrend channels, right? We've probed the resistance. We retested underneath of this previous support, now turned resistance, and we've created a little bit of a pullback coming into uh, this cluster, this trading cluster here, and we just basically now retested this cluster here. So if I start seeing a bounce and a bullish bounce from here, I will hop on the longs and hold it for a couple of days for sure, because that means we're going to have a little more oomph. I'm not really interested in selling just yet, and I will only be looking for sells if we take out this trend line here. So if we start closing, instead of us doing this and me buying it here, if that doesn't happen, if we just blast through it, a little bit of a pullback, and then start rolling over, that means euro is going back to retest parity. So I will be looking for shorts. But for now, I'm still looking for this bullish scenario to play out in the euro dollar, similar in picture in pound. This pound has a nice inverted head and shoulders. I thought we would take it out when we started rallying last week. I thought this was pretty much getting ready to take the resistance out. I was wrong. Did not. I wasn't ready yet. So a little sideways consolidation. As long as this level holds right here, I am okay. So basically, maybe we can do something like this. I have a long position right now. My stop is below here and below around 120. And if we do a bounce, I will start adding more aggressively on the break of this trend line here. So if we take out, that's when I start getting aggressive. Now I'm just risking 1% for 200 pip stop, which is tiny, tiny trade. In any case, but that's a possibility. Into the end of the second half of the August, we rally, and that's that. In any case, I hope this was helpful, educational. I'm hitting the 20-minute limit in the trading view. If you like, please subscribe, leave a comment. Stop by apexbull.com, and free Telegram link is in the description page. Hope it helps. Hope you make some money this week.